Money Morning Live, Eric here to remind you that Nick Black is going live later on today in the DHW live room with a trade for you, a trade that he plans to walk you through step by step to make sure that you execute it properly. You don't have to even own any crypto to make this play, and remember, you can make money whether the market's going up or whether it's going down. The only way that you can access this trade is through Nick Black's digital heavyweight service. The number is on the screen right now for you to call to get yourself involved. And don't forget, Nick will also be live here at moneymorninglive.com at 11:30 for you to hang out with him for free.
Hey guys, it's Liz. I have reached the stage of pregnancy where my tummy is a snack table and it is super convenient. You know what else is super convenient? VWAP. Over 6,000 companies are set to report earnings this season, but thanks to that magic VWAP line, you don't have to read a single earnings report. EPS, revenue, EBITDA, none of that matters. All that matters is price action in relation to VWAP. And of course, massive profits. Let me tell you what else is super convenient. Kenny has lined up a special deal on Warlock's World for you during the most important earnings season of the next 5 years. Garrett says it, so it must be true. Coming up this week, some of the biggest names are reporting. Microsoft, Google, Amazon, Apple. You don't want to miss that. Call Gabe right here at this number and he'll get you set up now with Kenny's special deal. As for me, I'll just sit here and eat. Go ahead, call Gabe. I have snacks. I can do this all day.
Call Gabe while she eats her snacks, and right now Nick Black is going live in the back room with digital heavyweights. But also going on right now is Tom Gentile, Power Profit Trades, right here in the main room. Let's bring in Tom in 5, 4, 3, 2.
Hey guys, Tom Gentile. Welcome to Power Profit Trades. It's Microcurrency Monday. There's a lot happening in crypto. There's a lot happening in the entire market this week. This is what we call the sweet spot of earnings. We're in it right now. Next couple weeks, that's exactly what I expect to see. Some of the biggest corporations known are going to be set to report earnings here in the next few days. So other than that, we got a couple of huge releases coming out midweek. Those could completely change the markets as well, not just long-term, but even intraday. So we're going to cram as much information and analysis as humanly possible in the next hour into this program to get you ready to trade all this action that's going on. And we're talking about Fed, not only just earnings, the Fed, they're reporting this week, GDP, so we'll get an idea whether or not we really are going into a recession. And yes, even some crypto. There's some news out in the world of crypto that we got to get to as well. All that in a minimum of 20, get it, 20 charts that we want to look at. Not only the long-term, the big stuff that we look at, but what's happening this week and what's happening beyond. So we're going to get into it right now, guys. Eric, hey, buddy, how's the weekend?
What's up, Tom? The weekend was good, and I saw the plan for today. There is a lot on the agenda, so there's little time for us to chit-chat back and forth, because I know you got so much to go through. But how was your weekend? I see.
Yeah. It was okay. I'm still having my back issues. I'm kind of standing. Well, I'm not standing. I'm in one of those chairs where you can just kind of lean back and just put your butt right on the chair so you're still standing up. So, right. As you can see, everything has gone up a little bit for me.
Okay.
So, man, and what a long day that I have going on as well. I mean, if you're part of cryptocurrency or microcurrency service, we're going to be on again at 1:00. We're going through a huge watch list as well. We're going to talk about the most recent trade we have going on, as well as the setups for Bitcoin and Ethereum. And we'll discuss some of that here too as well. And then I'm going to be on again at 3:00 with Vaz for trade to close. All right. We'll be catching up on that Citigroup trade I did, as well as the one in GameStop, and something else I have happening that I'm going to be doing at the close today as well. So a lot of stuff. It's one of those manic Mondays. Let's go ahead and get right to it. So last week was a tough one for the markets, but we handed out some pretty cool trades. Cool trades, hot trades, free trades nonetheless. And this is through, if some of you might get this, I don't know if you do or not, but hit me up in the chat. And Eric, tell me what you see. Who in here is following Liz's letter? It's called Trading Today. right? It's a letter. I think it's been out for a couple of months now. And my team and I help contribute some of that information. In fact, that's where we do a lot of our seasonality stuff. We start to introduce folks into the world of seasonality. So, Eric, who's following the Trading Today letter?
Oh, we have a bunch of people that follow Trading Today. Not everyone, but a lot of people. And if you don't know who Liz is, she's the one who was just in that ad with the food on her belly. She's pregnant. Yeah.
Yeah. So I mean, you know what? We help Liz out, and we give out trades now and then. In fact, for those of you that do follow it, then you probably know we booked 100%, 180% on the Intuit call spread last Tuesday. That was a money counter signal. And I believe you have a profit alert you can throw up on there that Liz sent out. Is that right, Eric?
I do. I'm not going to go through it completely, but a profit alert, take 180% on your INTU call spread. And this is Liz just coming through with the information. Some call it spam. Others call it opportunity, Tom. Opportunity here to make some money. That's what I like to call it myself.
I don't know how you can call profit on Intuit spam, but
exactly.
I mean, it is what it is. How about a profit on Costco?
Yeah,
because we took 53% on that on Friday.
Profit alert, 63% on Costco. Liz was back again, making sure that all of you took your profits to make your money, and you didn't get stuck with it.
Yeah, so there you go. I mean, I wanted to just throw those out there for those of you that follow us through Trading Today. And if you missed the latest trade for Liz, just sign up for the e-letter, and then you'll be able to get my stuff that we put out through Trading Today as well as everybody else's. If you made money on those spreads, let us know how you did. I mean, I look back and I think, with all the trading information that comes out, because you got to remember at the end of the day, folks, we do the research for you. It's your decision whether you want to take advantage of that. So, you might be looking at Intuit and you might think, I don't know. But a lot of you took a look at Costco and said, yeah, I understand that business model very well because they're right down the street. And so sometimes certain stocks, certain things that we do will gel more with you depending on what you know about the company itself. All right. So got a huge week coming up, Eric. We got a lot of catalysts. Mm-hmm. So let's talk about markets. Let's talk about the fact that Wednesday is going to be a big day. Wednesday is going to be a big day because we got another Fed rate decision. Now, I'm going to poll the audience one more time. How many of you believe we're going to get a 75 basis point rate hike? How many of you see that? Yes.
Basement Buzzard says yes.
I know. Who's thinking we're going to get a full point? Who thinks we're going to get a full point? I mean, and now, even more importantly, how many of you think that we're going to get a drop in the markets because of that? I'm seeing 1% rate hike, 50%, 75. So 75 is going to be right down the middle there for sure. And so here's the thing. It isn't what we believe that rate hike is going to be as much as it's going to be what is the reaction going to be coming out of the market. So, pre-open, that's the next morning. So forget Wednesday for a moment. Let's move into Thursday. Got GDP coming out, right? Second quarter GDP. That's really going to tell us whether we're entering a recession or not. Plus, amidst all of that, we've got earnings. And so this morning, Mondays, guys, are relatively quiet. We don't get earnings reports that come out on Mondays. We typically don't get a lot of them that come out Friday morning. Earnings usually come out Tuesday, Wednesday, Thursday. Those are the big 3 days of the week that earnings come out. And so later this week, we're going to hear from companies like Apple, Amazon, Meta, Intel, Chevron, Exxon, PG. Let's take a look at the key events this week. Eric, you've got them up on the screen. Again, once again, we got Fed decision on Wednesday. We got GDP data on Thursday. We got earnings. And this is just a small handful, all right? Meaning if you got 6 fingers on one hand, and some people do, right? Some people do, all right? But you take a look at these 6. Let's take a look at these 6 right here on the screen. So I'm going to pop on over and I'm going to look at what's happening on the screen. And so what you see here is, let's start with Apple, all right? Apple's due to announce on the 28th. Apple, if you take a look at what's happened since their last earnings report, I took a 100-day chart back, folks, so you can give you the range. Last earnings report, before that, Apple was sitting up at about 170, almost 179. During their earnings, when they announced earnings, we were down at 155. We had a one-day pop, and then everything started to drop again. So when you take a look at Apple and you say, well, Apple's supposed to be a great company. Why am I losing money on Apple? Again, this didn't have a lot to do with their earnings that particular day, but why did Apple stock go from 160 down to about 130? And you got to really push that out about 6 weeks to 2 months after their earnings. Well, it's because of, again, supply chain issues. All right. You've got higher labor. All right. So it's going to cost more for them to keep that talent that they have. And all of this equates into what we call guidance. And so since that low that happened around mid-June, we've seen Apple move from about the 130-ish area up to around 155. Okay. Great. 130, 155, but we're coming into another earnings cycle right now. I can tell you what is moving higher, and I expect it to exceed the highs in mid-June when we had that drop down to the lows of the year. That is the implied volatility number. It has started to surge and started to spike here in the last 2 days. Expect that trend to continue. The problem with Apple is we don't have a pattern on direction, a clear pattern on direction. And so, therefore, the only thing we do see going up is implied volatility. But I have a plan for that as well. And I want to show all of you the plan for the Apples, the Amazons, the Metas. I'll show you a little plan on that in just a few minutes. But take a look at Apple. Let's take a look at Amazon. Amazon is also reporting on the 28th. Amazon, if you take a look at, if we're going to compare apples to Amazon's definitely in the lower quadrant of where it's been this year. Its high for the year, 169.32. Its low for the year is trending just above 100. In fact, we triple bottomed on that before starting to make a little bit of a run up. Currently trading around 180 or 121.87. And you can see here, what is going up for Amazon? Well, that implied volatility is definitely shooting up. Last earnings, Amazon, when they reported, they went from 145. And remember, this is after split numbers, so it was a lot worse back then. But if you take it in terms of percentages, it's literally the same thing. We went from 145 and dropped down to 125 in a matter of 1 day. And from there, fell all the way down to, with supply chain issues, with forward guidance, with additional costs, with unions coming in and affecting some of their distribution centers. This is all hitting their forward guidance concern. You can see here, Amazon put in a quad bottom down here in the low 100s before jumping up a bit. Now, the only thing that we see jumping up a bit here between now and Thursday is that implied volatility number. It would not surprise me in the least, Eric, if we exceed the volatility up here, which was near 70. That was right before the last big drop. So I'm sure a lot of people are sitting here looking at Amazon and they're holding their breath wondering, what is this stock going to do come Friday morning after their Thursday afternoon report? Well, we'll get a better idea when we get into the week. But if we get up here to around this 70 area, it's definitely they're going to be pegging Amazon to make a big move after earnings. Is it going to be up? Is it going to be down? Is it going to be sideways? It's anybody's guess, but we as option traders can figure that out. And we will figure that out, and we'll talk about it here on Wednesday, because that'll just be literally 1 day before that earnings announcement comes out. How about Meta? Meta is the same kind of situation. It's got earnings in 2 days, and look what's going on with it. The implied volatility shot up from just in the last couple of weeks from about 50 to above 90. So it has gone up considerably. Greater than 65% on the options premium just in the last couple of weeks. Now, part of that is because of what happened last week when Snap reported earnings and got hit really hard. It hurt companies like Meta. Meta got clocked a couple of times Thursday or Friday, and then again today it's getting hit a little bit hard as well. So this one's going to be a very interesting one going into its earnings report as well. Next earnings on Meta is going to be in 2 days. IV, I'm expecting it's going to be above 100 before Wednesday afternoon. All right. Now we kind of get out of we get out of tech for just a moment, let's take a look at Exxon. Let's take a look at Chevron, see what's going on with them. So your yearly low to yearly high. It's very seldom do you see a stock where we're starting out the Fibonacci at the beginning of the year and the end is higher than the low. Most stocks, we're going high to low, not low to high. All right, with an Exxon, we started out toward the first quarter of the year around 77, and we ran all the way up to 100, almost 105 before dropping right back down. Look where this thing came down to, 80, but it's hanging out today around $89.17. Volatility has not really been on a big surge because, honestly, the volatility in the oil markets has been high enough already. So that's Exxon. Chevron and their earnings come out in 4 days. So do Chevron's. They're coming out Friday morning at the open on the 29th. And you can see here, same thing. All the volatility up, down, has been dealing with price, dealing with what's going on with Russia and Ukraine, dealing with the price of gasoline and, of course, oil here in the States. But since that big drop where we went from $181 down to $135, that is a massive, massive drop. All right. They did not meet their earnings expectations last quarter. That didn't hurt them. What hurt them was the price of oil and gas. Just, I've seen the price of gas now is, I want to say it's probably off. Well, it was $3.99 a gallon. I actually filled my tank up this weekend, Eric, and we were at $5 a gallon. What was it, a month ago? So, I mean, we've dropped gas prices 20%. I don't know if a lot of people are talking about that, but boy, I mean, when you get a 20% drop in gas, and yet you see Chevron go from 181 down to the low 130s. That's a lot more than a 20% drop. It's a considerable drop, and that's where a lot of the value traders came in. We'll see what they report. They missed last quarter. We'll see what they end up happening this quarter. I think they're going to have a slight beat. And I think that will definitely help them, at least for the short term. Again, they report on Friday. And then finally, and I want to jump in and talk about this one real quick, and that is Intel. Right? Intel is one of my largest holdings long term. Okay, so I let you guys know what I'm holding long term. I let you know what I'm holding short term, especially here in the 11:30 in our main room. I'll let you know what I'm holding long term. I hold a lot of Intel. I hold it at different price levels, and I'm looking at this as a 3 to 5 year play. But Intel really got hit. I mean, $52.25 coming out of the first quarter of this year, all the way down into the mid 30s before getting a little bit of a snapback. But look at that IV. That IV shot up like a rocket back in April. And of course, they beat on expectations. It's their guidance. All right. It's, again, chip costs, commodity costs, and labor costs, which help drive that price down. IV's going up. We've got earnings coming out in 3 days. I expect to see the IV top or maybe even beat what we saw happening just 3 months ago. Right, so that is Intel. So, guys, if you're looking for volatility and you're looking for tradable action, if you like the short term, you're going to love this week. But if you hate volatility, or if you're trading this in this medium term area, right, and you're not crazy about whipsaws, you might want to pass on the week. So, overall assets, let's get into those right now. So let's talk about 5 or 6 of the big assets, that 30,000 foot view that I like to look at. And so what I'm going to do here is I want to go into the charts once again, use the same things. We're going to look at Fibonacci. We're going to look at implied volatility. But I'm also going to zoom in, kind of give you an idea of what we're seeing. And I got a new chart for you this week that I want to share with you. One of you here on Monday Morning Live, and also somebody on the YouTube channel was asking about this too. Can you show us a different currency other than UUP? So I got one for you and give you a really good idea of what's going on outside of the U.S. Let's start with SPY. First quarter, we were sitting on highs at 461.53, dropped down as low as 365 and change. We've come up in this area, and we were expecting a move to get us up to around 402. We got as high as 400 on Friday, dropped off on that. We might see some sort of sustained move to this area, but there's a lot of bears that have been waiting for this move up to around 400. And they're using this as a potential selling area, expecting that rate hike, expecting that GDP number is going to be the tipping point that takes us to lower lows. Now, honestly, I really don't care. I don't care because, volatility, which helps me so much and helps in strategies like our Operation Surge Strike strategy, and even quantum, all right, have sidelined me for the last few weeks, sidelined me in terms of profits. So if this rolls over, good thing, because again, we're going to see volatility bump up even more. I think volatility is going to bump up just fine as we're going into earnings. But if volatility bumps up, we get this rollover. That is, to me, that is a cure-all for anyone out there that is long volatility or even long trend. If you're focused on the downtrend. All right, so I'm looking at the overall market and I'm looking at the reaction that's going to come out of really tomorrow, Wednesday, Thursday. Those are big, big days. Those could be the biggest 3 days of the year right now, folks. All right, TLT, if the bonds traders have anything to say about it, they've gapped it down today. Let's see if they gap it down again tomorrow and into Wednesday. And that'll tell you the bond traders are expecting that 75 basis point minimum rate hike that is expected to come in on Wednesday. TLT, you can see TLT was at a tie. It dropped from 140 down to 108 and change before getting a little bit of a rebound. It is acting a lot like the stock market. However, if you take a look at this, here's the S&P again. See how we came up? We didn't even get close to that 402, although we still might do it before Wednesday, kind of rolling over a bit. The bond market's acting very much like the stock market, where we're seeing the trend in bonds. Is the bond market pulling the stock market along for a ride? Well, it certainly looks that way as it bottomed before the stock market bottomed. Could it have topped before the stock market topped? We'll wait and see. One move is not a pattern, but it's very interesting nonetheless. FXE, this is the new chart I want to show you. This is the currency shares Euro Trust. You can trade this in your equity account. You don't have to be a futures trader to trade the FX markets. You don't have to be a Forex trader to trade the FX markets. There are currency shares that you can trade in. The symbol, again, is FXE. Now, FXE had a high earlier this year at 103.43. This moves with the euro dollar. However, it's priced under the euro dollar a bit because, as you can see, it's trading right now, even after the jump. Remember last week, everyone was talking about how the euro was par with the dollar, that they were both literally the same and euro was under the dollar. Well, it's come back. The euro is not par with the dollar anymore. But you can see here, we've seen some liftoff, but we're still way, way in the bearish camp right now. When you look at that Fibonacci from high to low, we went from 103.43 down to below 93, currently trading at 94.43. And so there's quite a bit. We got to get above 96.74 before we're out of the danger zone in terms of the euro dollar. So the US dollar is still strong against the euro and other major currencies. This chart shows it. Okay. Commodities. Let's take a look at some commodities real quick. I've got USO. I've got 3 commodities to look at, and then we're going to end with the VIX in the overview. Look at this, the first one, USO. Okay, you want to know why Exxon's moving down? You want to know why Chevron's moving down? This chart right here is exactly why. We had USO at 68, ran all the way up to 91.99. If you remember, that was back in June. Oh, what a difference 2 months make. Because actually even 6 weeks, because from literally the middle of June to the middle of July, all right, not much more than a month, we went from 91.99 all the way back down to 70. Had a little bit of a bounce, but look here, folks. All right, let's zoom in and take a look at this chart right here. See what happened here? So we dropped all the way down, and we're trying to bounce again, but we're having trouble getting above that $77.34 area on oil. Okay, so if you see, we ran up, we pushed through the 38% pullback and the 50% pullback all in literally one day. Had a little bit of a rally, but then broke down, right? So this uptrend is no more. There is no uptrend right now in USO. It's gone. By all technical means, that uptrend for the year has been shattered. What's going to happen? There's going to have to be some build back. It's going to take time. I don't expect we're going to see it anytime soon. What about the clean energy, the cleaner energy, which is natural gas? Take a look at UNG. UNG did a very, very volatile move, starting out the first quarter, coming into the second quarter at 16, went as high as nearly doubled. I mean, we nearly got to 30. We were at 32 and above 32 before the close. All right, but talk about 16 and 16 is 32 is a double. A month later, we're trading back down at 18. And a month after that, look where we are, back to 29.27 today. And so the volatility with UNG, and keep this in mind, those of you that are option traders, you know, that you're what I call the level 3 option trader, your past price, your past time, and you're actually looking at vol, you're probably wondering, why is the volatility literally following the price? Because volatility, when it comes to commodity-based, all right, ETFs, typically move with the commodity, meaning that in the case of United Natural Gas, we see volatility go up. We see the greed index, right? The greed index climbs with the price, right? The fear index climbs with the price as well. And so you're seeing that right now, as you saw off this bounce here around 19, going up into the 29 area. Look what happened to the options. The options went from about a 65 to over 100. So we saw a better than 50% increase. All right, when you tack on from 65 to over 100, that's a better than 50% increase in the option prices in the last month. So where they were potentially buying opportunities back at the end of June, they are no longer buying opportunities. If you're just going to be flat out long volatility, you're going to be paying a price. So now this ends out, Eric, with one more chart. I've shown everything except the one chart that's telling us that the market still might have room to go higher when you look at a short term. But the long term, there's something we need to talk about, and that is the VXX. All right. Oh, you know what? Let's look at gold for a moment. Gold's still in a downtrend. Nothing to see here. Other than the fact that we come all the way down to 158.04, we got a little bit of a bounce. But again, gold is now stuck in a box. And the box, in my mind, is really somewhere around 162, 158. Get below 158, the downtrend is still intact. Get above 162, and maybe we might have broken that move to the downside. We shall see. All right, VIX. Talk about downtrends. The VIX is definitely showing itself in a downtrend as we're seeing that move drop off. Remember the 30s we had at the beginning of the year and at March, and then again maybe around late April, early May. Those high 20s and low 30s are gone. And this is one that we have been predicting, that the VIX was going to come back down at or below 20. In fact, it opened at 20.06. And the low is 20.04, it's 27.7 right now. But I mean, let me show you what I'm talking about. It's down here, folks. The VIX has dropped quite a bit. Now, the fact that it's still trending down possibly means that we could see some more moves to the upside. But let me share something with you. Coming out of this quarterly earnings, as we come out of the month of August, all right, we're still in July. We go through the rest of July, we go through August. September is typically the worst seasonal month to be holding stocks, right? Because the one thing we do see happening in September and October is a rise in volatility, a rise in the VIX. So maybe you've heard that adage, when the VIX is high, it's time to buy, and when the VIX is low, it's time to go. Well, we're getting low. So this could be a longer term setup for that rollover that we're potentially talking about with the stock market, right? So a lot of mixed messaging when you look at what's going on. When you take a look at stocks are on the rebound, but they've run into some resistance. The S&P ran into resistance at around 400. The bond market wants to trend lower. That's not going to be good for stocks because it's telling us that yields are continuing to go up. Money's continuing to tighten. The commodity markets are telling us the same thing. Cash is still king. The US dollar seems to be the king around the world. Commodities, it's a mixed message. You got the oil market's plunged, and that makes sense because we're seeing interest rates go up. UNG typically goes opposite of the market when you look at the long-term performance. It tends to be an area where people fly. It's a flight to safety. If it's going higher, are people flying into safety as well? And of course, we have low volatility. So a lot of this is kind of telling us that we're not at a bottom quite yet. We might double bottom. We might make new lows before we see this bear market trend come to an end. All right. So, Eric, what do you say we get into a little bit of strategy?
I think that's a great idea, Tom. Let's dive on in over to that.
Cool. All right. So, guys, if you were hanging out in the chat room last Friday, all right, how many of you here were listening to Mark Sebastian? And I think Mark Sebastian was talking, and Chris Johnson came in and went way off script with him. Were any of you guys here Friday listening to these two go, kind of go back and forth? Because if you were, there was a very familiar looking troll in the chat. Eric, let's talk about that troll.
It was you, Tom. What were you doing there in the chat? And he says, and all I can do this morning is sell puts on Snap and troll both of you guys. Always starting trouble, Tom.
Yeah, well, when I saw Snap's earnings on, that night, they came off and they were already down a huge amount. And then they end up down like almost 40% that day. All right. So I looked and said, you know what? This is not one of those ones. This is an exception and not the rule, because what happened was IV was high on Snap and it didn't go down because the price got hit so hard. The price got hit so hard that IV for the following week and even the following month continued to stay high. And so, I threw that up there and had a good time with it. But, in all seriousness, folks, we know the stock traded hard. It was a 39% drop for the day. All right. But the thing I noticed about the chart is that we had that big gap, that big opening gap that dropped. And then the stock kind of just, after the first hour of the day, because we fell down to the bottom area, and we pretty much barely moved. All right. So I was selling puts. I think I did 3 different sells on Snap throughout the day. But really the price action was overnight. Yes, that first hour they pushed it down, but after that we kind of sat in a range somewhere near 10, near that area that was around $10. So if you let's take a look at Snap right now. So I'm going to type in SNAP. I want to bring it up on the screen and let's see what Snap's looking like right now. So Snap is right now trading right around 10. All right. Which there's a lot of value traders out there that think 10 is a great place to dip in. They think they more than likely will solve some of their problems. Will they get back to $80, $83 or $81 where they were at the beginning of the year? I don't think so. But could they get back to a 20 or a 25? I think that's entirely possible. That's why I started selling puts on Snap, and I sold the 10 puts on Snap. I think I took in, these are the August, I took in, I think, 70, 75. I'm in there for around 70, 75 cents, which basically means that I can take a position in Snap if I get the stock put to me, and I'm going to be in somewhere down around the $9.25 to $9.30 area, which we haven't been at, all right, anywhere on this chart. So it looks like a pretty safe position, right? Now, why am I selling puts here? Why did I take this trade? What was so significant that told me I needed to get into Snap? Other than the fact that the price was absolutely crazy. There was so much pent-up fear that came into Snap. There were so many people on mainstream media talking about Snap that they pushed the volatility in a different direction than what I'm normally seeing after earnings. And so I had to take advantage of that. If you're interested in learning how I do that, folks, you might want to call Gabe, maybe slide into his DMs and ask him about a program that I do called Rocket Wealth, or Rocket Wealth Initiative. So this is a top tier option strategy we do, all right, that generates monthly income. And even names like Snap, which is a really, really cheap stock right now, that you don't necessarily think of when you think about wealth generation. Cash secured put selling is one of my favorite longer term ways of creating wealth and even getting myself getting on top of a couple of stocks at a better than market price and get paid for it. So I know the big question of the day is going to be, how's it doing? How's your Rocket Wealth program doing? All right, so we started this thing in 2020. We actually ran through 2020 with 100% winners. All right, coming out of the pandemic. How did 2021 do? 93% winners on the closed trades. How's 2022? What have you done for me lately? That's what a lot of people say. What have you done for me lately? And while we have we've taken some losses in quantum, because that is again trend based. What's the market been doing? Not doing a whole lot of trendiness here in the last month. How about volatility? Volatility's dropped too, but volatility drop is exactly what we look for. Eric, if you haven't done it already, throw that spreadsheet up.
We got it. We got you covered.
Yeah. So this is what happens when you have a longer term. And when I mean long term, I'm talking about average of 60 days. These trades are on an average of about 60 days. All right. Longer term trade, highly probable, first class stocks. I don't know if you could look at Snap as a first class stock anymore, or value, getting these trades at what I like to call the Benjamin Graham method of grabbing value. And so, you look across the left-hand side, you can see things like Constellation is on here, ALB, you've got Humana, NVIDIA's on, taking positions in NVIDIA, Ulta Beauty, UPS, Apple's been on here. Apple, Microsoft, guess what? Apple's coming up for earnings again. This is a great time and a great opportunity for us to go in and look at these charts. So, by the way, 25 winners, 2 losses for any that are counting, or you can't count because it's too small to see. There's a lot of 100%ers in here too. But if you take a look at, say, an Apple, I'm going to put Apple back up on the screen. So the way we look at this in terms of this type of strategy is we're not looking at this chart. Okay, this chart's great and all, but what I want to look at is I want to look at something called probability cones. So I'm going to come through and I'm going to show you a different kind of chart. Probability cones allow us to take a look at forward volatility, and we put this in a form of what we call a standard deviation chart. Okay, now standard deviation charts, most people will take a look at standard deviation charts, and they'll run their cones based on a 20 standard dev, all right, which is the last 20 days of the stock price. What we can do is we will take that cone volatility and we will apply it to implied volatility. So if I go in and I take a look at, say, the 7 to 149 day IV, and I can update it with that, I'm going to get a different cone. The cone's going to stretch out a little bit. But what the cone is telling me is where the safe zones are. I don't want to be selling puts on Apple in the blue zone. All right, I don't want to sell puts on the blue zone. I want to sell past the blue zone, maybe even closer to the red zone. So when I look at Apple, what stands out for me? Something down here near the bottom of this screen, I would say anywhere between the where we are at 114 and 132. That exact trade I'm going to be putting together for the close today. And so I'll be talking about that with the trade to close. But this gives you an idea. How far out am I going to go? Well, again, that's going to be largely based on what I can get. But I can tell you, I'm not doing weeklies with this. I'm not even going to do the front month. All right, I'm going to be going out a little bit further, because that's the strategy that we do with Rocket Wealth. And that's how we've been able to be in this 90+% in terms of win-loss ratio. Not 1 year. We're now on our 3rd year of this particular strategy. So once again, if you're interested in this, guys, I wanted to go sideways and show you something a little different and how to create that trade. And how would you place a trade like that? Well, it's very simple. We're selling these puts. So we're selling to open. And how are we looking to profit on this? We're looking for the put prices to drop. If you sell something high and you buy it back lower, that is another way you can make money. And some of you in here are new, and I understand you don't understand the concept of selling now and buying back later. All right, but trust me, as you learn this particular process, you get it. A lot of you in here didn't know what a call spread was when me and all the other folks here started talking about these. And so, our biggest job, I believe, at least for me, between 11:30 and 12:30 on Monday, Tuesday, and Wednesday, is to teach you this stuff and really teach you the number one, there's more than one strategy that you need to know. Okay, you can't be you can't be a master of one and expect it to work all the time. It doesn't happen that way. It doesn't happen. Doesn't matter how good my back tests are, and I run a series of them. All right, I cannot predict the future. Nobody can. There's absolutely nobody here or nobody outside of this room that can predict the future. All we can do is we can use patterns, price patterns, volatility patterns, time patterns. And I use each, all right? I use each. I use price patterns in quantum. I use volatility patterns in Operation Surge Strike. And I use time and statisticals right here when it comes to Rocket Wealth. So now we looked at, I looked at Apple. I want to go back and look at Snap for a moment. So let's take ourselves back to Snap, SNAP. All right, so I'm going to bring that back, and we're actually just going to look at a regular stock price of Snap. And I want to look at the stock price, and I want to see the volatility, because here you go, guys. Take a look at what Snapchat did coming into the last, the week before that earnings announcement. So the week before the earnings announcement, Snap was actually trading at around 13. All right, so Snap was at 13. Let's find Snap again. There it is. So Snap was at 13, and then it dropped back down to 10. So, when you take a look at what happened prior, I mean, we had a big move in the Snap before the drop, because everyone was expecting Snap earnings to look really good. And they did beat. Guess what? It was the guidance that killed them. It was the drop of subscribers that killed them. It wasn't the earnings. But I want to show you what also dropped. Look at the implied volatility number that jumped up with Snap, where we went from, when we were trading in this little hook here, this small move before we broke out of it, Snap's vol was high, but it was still trading, but it was at 90. And it went from 90 to above 165 before dropping. What's interesting is it dropped the day before the earnings came out, and then it dropped again the day after earnings. So there were a lot of long vol traders getting out of Snapchat 2 days prior or a day prior before the earnings even got taken out. So what do we know about pre-events? Well, we know if we hold through the announcement, a lot of times we can get burned pretty hard, okay? You can always guess on direction, but you're going to be right or you're going to be wrong. You can also guess right on direction, but wrong on volatility. You can actually end up being wrong. And so, part of what we do here, if you take a look at Snap can be a tale of two strategies: a long vol strategy coming into earnings and a short vol strategy coming out of earnings. And that's that long vol strategy. This is something that we do with certain stocks with Operation Surge Strike. And the short vol strategy, well, I just showed you what I do with that today with Rocket Wealth. So check that out if you're interested in it. We got a lot more headline risk than usual this week, especially with all the stocks that have still not reported earnings yet. Not only we got a Fed meeting, the stakes are high with inflation right now. So we're going to get a rate hike. Question is, how much is it going to be? What effect is that going to have on the markets? What about GDP? I think that inflation, you look at volatility as a whole, not just in individual stocks, but look at the S&P, the Qs, the IWM. You're going to see that vol creeping up into Wednesday and even into Thursday before we might get a little bit of a fall off toward the end of the risk. Or the end of the week. So guys, all I'm telling you here is a word of caution. Define your risk, all right, on every single trade and play it safe, all right? We're not meme traders here. Even though one of the stocks I'm trading right now is a meme stock, it's GME, I'm not a meme trader. I'm not throwing everything I have at one stock, all right? Those days are long behind me, long behind me. You got to go back to 1987 if you want to see me take my entire account and put it into one trade. I did that. I suffered from it. I decided that didn't feel so good. So I'm not going to do that again, right? So Eric, let's go ahead and preview some earnings that are coming up. Not this week. We already talked about this week's earnings. Let's talk about next week's earnings, and I'm going to leave you guys with one of them that I really like. All right, so we're going to go through or really my last 5 charts I have with you. Well, not last 5. I got 7. But I got 5 more I want to share with you right now. So let's dial this down to 30 days. And then do you have something you're throwing up on the screen for everybody, Eric, or am I just going to take it and show them in the chart?
You're taking them right here through the charts, Tom.
Okay, then this is what I'm going to do. I'm actually going to go backwards. All right, so let's start with eBay. So eBay announces earnings in 9 days, not this week, next week. They're going to announce on the 3rd. So when I look at eBay, is there a pattern on eBay? Yeah, there's a pattern. It's not a really great one though, but you can definitely see that the surge has already started with eBay. And really, if you take a look at the high that happened, so I'm looking at the red line here. So you got red line volatility, lower high, lower low, all the way down to a bottom. We got a higher high here or higher lows off of the end of June. So we had one in the beginning of July, had another in the middle of July, and the lows keep getting higher. The breakout high that I thought was very interesting occurred right here just about 2 weeks ago. The next breakout high really occurred Friday. And here's Friday. Here's Friday's number, and here we are today. Notice what Vol's done. Vol went from 2 days ago, it was trading at 44. Now it's trading above 50. So we've actually seen volatility up about 18% just in the last 2 days. That's going to climb over the next 9 days. If we go back and look at this over 90 days ago, so I'm going to take a look at this 90 days ago, and I'm going to move back again and look at eBay, because look what eBay did 90 days ago. Does everybody see this? Their vol, and guys, we're sitting at 50 right now. All right, so the last time the vol was at 50 on eBay, we were right in this area, and the volatility went from 50 all the way up to 80. Again, looking at the right side of the chart, not the left. This is stock price on the left. This is options implied volatility that we chart on the right. So we saw last time that IV went all the way up to above 75 before cratering after earnings. So it is possible that we could see another 50% tacked on in implied volatility in the next week. Okay. Hold the thought on what you do with this for the moment. Let's take a look at SoFi. All right, SoFi Technologies. Look at what happened last time we came into earnings. So you take about 2 weeks out. About 2 weeks out, again, SoFi is what? It's a it was a $5 stock that became a $10, a $10 stock, that became a $5 stock, that became a $7.50 stock, a $5 stock again, and now we're back up to $6.50. All right, this one's a cheap one in terms of the stock. But look what happened. In 2 weeks, the implied volatility went from about 105 all the way up to 150, and then back down even below, down to around 75. Right now it's trading at 80, around 87, 88. We could expect to see this same jump in IV. Now I got to tell you, coming into last week's earnings, we saw a big drop in SoFi prior to its earnings. If that drop is going to come again, the earnings are in 8 days. Okay, the earnings are due out on the 2nd, so about a week from tomorrow. Is it possible for the next few days SoFi could drop? Yes. And IV could shoot up? Yes. But how good is that pattern? It's not the best. Okay, if it does a repeat of last quarter, great. But what did it do the quarter before that? What did it do the quarter before that? What did it do the quarter before that? That's what we do. We look at that minimum of a year's earnings going back to see if we can spot price pattern. Let's back it up again. Let's look at PayPal. So PayPal has earnings coming out in 8 days. If you take a look and see what PayPal did, last time PayPal had a drop, we were nearly at the highs. And we took a position in PayPal with Operation Surge Strike that handed us a 250% gain as it dropped down. Now, this was going into about 2 weeks to expiration. You go into 2 weeks to expiration with PayPal now, you're behind the 8 ball. But I'm looking at what happened in the last 3 days where we hit this move up and we're starting to pull back again. Is it safe to get into a shorter term trade with PayPal? Maybe, because this one has had a history of moving down, especially the week prior to earnings. But not the best. Let's take a look at another one. Here's Chesapeake Energy. All right, so if you like the UNG space, all right, if you like the natural gas space, this is a potentially an interesting one. The problem with it is that its IV also rises in volatility as it goes into earnings, but we've seen it fall sometimes heading into earnings. And the reason why is because, again, this stock is tied more to what's going on in the price of natural gas than it is sometimes to its own earnings. So this one, too, is not the best. Finally, this is one I think is an interesting one, AMD. AMD has a history of actually moving, guess what, higher ahead of its earnings. It's had a little bit of a pullback here in the last couple of days. If you go back and look at the last several earnings announcements, AMD has moved higher in its week prior to earnings. So I'm going to be looking at that one very, very closely as well. So that's what we're looking at, guys, when we take a look at what we have going into earnings. So you know what, Eric? We are trudging ahead. We need to talk about cryptocurrency, my man.
All right.
So let's talk about what's going on with the uproar in the crypto community when it comes to that civil complaint that's going on. What was it? A couple Coinbase employees really kind of started this, right? The first ever insider trading case that involves cryptocurrency. That came out late last week.
Mm-hmm. Yep. Nick and I were talking about that later on, or last week on the show. And right now we have this right here. The CFTC should vigorously enforce the law and uphold the Commodity Exchange Act. This responsibility over our jurisdiction has been entrusted to the U.S. by the Congress and the American people. The CFTC must not break that trust, and we must remember whom we serve. But yeah, Tom.
Right. So, Eric, I know a lot of folks on here heard of the SEC, Security Exchange Commission. The CFTC is very similar to them, but on the commodity side, CFTC is the Commodity Futures Trading Compliance. Okay, and so CFTC handles the commodity side. The CFTC and SEC have kind of dug their heels in on several areas that are not considered commodities or securities, and who's going to have regulatory approval over that. I believe the CFTC has won when it comes to cryptocurrencies, because even though cryptocurrencies are not considered a commodity, they do have futures accounts on crypto. And so whoever it is, I think there's no avoiding any tighter regulation here. And I've long said that regulation really takes something like cryptocurrency and legitimizes it as a true asset. So biggest name in crypto right now is Kirkland, which is Kirkland Ellis, the bankruptcy lawyers. So they're working with Voyager and Celsius, I'm sure you guys remember those two names, to restructure those firms post-bankruptcy. And so is it Babel Finance also hired these guys to help them out with their liquidity troubles. And so why don't you throw up that headline that we pulled up that really kind of talks about this?
Sure. This one is a finance section. They said they thought crypto banks were safe, and then came the crash. Crypto firms such as Celsius and Voyager pitched themselves as good alternatives to traditional lenders. And then we have the quote, "I never had a bank tell me, I'm sorry, we're not allowing you to withdraw your money." Sometimes things are too good to be true. And yeah, I mean, especially with Celsius.
Wait a second now. Obviously, these folks haven't been to Russia yet. Isn't that right, Eric?
That's true.
I believe there's some banks in Russia that were not letting people withdraw their rubles. But hey, listen, regardless of what agency here gets the W to police the digital underground, expect the regulators to come down pretty hard, because they've got to definitely get a W and come out and justify what it is that they do for taxpayers. Okay. In the meantime, this space is really loosely regulated, so kind of keep that in mind. Here's a basic rule. A number one basic rule that I have for me is that if it's not on Coinbase, I don't trade it. Here's another rule for you. If I don't understand it, I don't hold it long term. And here's rule number 3. If it's got too many zeros in front of it, to the right-hand side of the decimal point, I don't need it. Okay? So let's cut through all this noise and all this regulation. Let's take a look at some quick technicals and I'm going to just share those real quick currency charts on BTC. Here's BTC. Now, I've got the drop outside of what happened at the beginning of June, because that was a pretty huge drop that we saw happening. We crushed through 30,000. We went from 30,000 to about 18, to below 18 very fast. From there, we've hit some very, very interesting support, and we've climbed out of that support and got as high. Folks, we got as high as nearly 24,000 last week. Now we're getting a bit of a pullback. I think we're about 10% back, a little more than 10% off those 24,000, that 24,000 high, somewhere real close to it, right? What we're seeing is where we are right now, this double line support. See this area here where we're currently trading? I think it's around 21.7, 21.8, right? What does that come in line with? The resistance that happened last month and the month before that. So what's happened is resistance in technical terms is now becoming support, right? This double line support level could be a great place for this to hold, but I'm going to tell you something real quick. If we get spooked, right, the stock market gets spooked by what's happening with interest rates that come out on Wednesday, if the stock market gets spooked by the GDP number on Thursday, then I expect this to drop back down to where the initial surge in crypto happened. And that, my friends, was just below 21,000, right? So I still believe we're going to stay above that $20,000 mark. But do we stay where we are today? Do we hold that line, or do we come back to the longer term resistance, which is below 21,000? Again, really the next couple of days are going to be what give us that. Now, let's take a look at one more as we're getting to the end of the show, Eric, and that is Ethereum. So Ethereum symbol ETH, I mean, this one's definitely the stronger of the two, because when you see Ethereum that goes from, I mean, this thing was down to 900. The low was 900 back on the 18th of June. And we managed to go from 900 to 1600. That's a huge, huge move up. I would say it's greater than 60%, right, off the bottom that happened just a little more than a month ago. And we were trading just around 1600 last night. Come down, we're trading just above 1500 right now. Where is the support for Ethereum? Is it where we are right now? Well, one could say, yes, we got some short-term support, because if you take a look at what's happened in the last week, we've come down and we've closed right where we are right now a couple of times. If you go look back last week, let's go backwards in time. Thursday, right, we opened where we are right now. Wednesday, we closed where we are right now. Thursday or Tuesday, we opened where we are right now. Monday, we closed where we are right now. All right. But if you drop back, if we do close below the lows we've seen for the week, then we got to go all the way back to 1350, which is going to be the longer term support. That was where the big rally pushed us higher, and a lot of people bought into a lot of coins on ETH. All right. So if you want to know more about what I'm doing in the world of cryptocurrency for my microcurrency members, then come back and join me at 1 o'clock. We'll be getting into that. Otherwise, I will see all of you back here again, 11:30 a.m. sharp, as we get a little more detailed into the earnings season and what to expect. Not so much this week, but what we're going to expect in the first week of August, maybe even into the second week of August. All right. Till then, have a great rest of your day. I think Kenny and Voz are up next. I'll see you guys real soon. Bye, everyone.